Hey y'all, I want to spend a little bit talking about how to do a monetization analysis during the due diligence process for acquisitions. Now, big disclaimer, I'm not a classically trained finance person or CPA. I have been on the buy and sell side of tons of different deals, and this is really just my perspective as an SEO and digital practitioner on what to look for during that monetization analysis process and really how to assess it through a digital lens and an SEO lens. So here are some common questions to think about, some data to pull, and really how to look at monetization opportunities to find a lot of leverage in potential acquisitions. So just hopping in here, one of the first questions I really like to ask is, how do they make money, obviously? And then how diversified are their revenue streams? Are they super reliant on only one revenue stream or one potential partner or affiliate program to make all of their money? Or are they really just reliant on a few pages to generate the most of the monthly recurring revenue that the site has? And so digging into hopefully revenue by ad type, by partner, and by page. If you can get all of that from the seller, ideally a cross-section of all of that information is going to be the best data set to give you a really representative view of how revenue has ebbed and flowed over time. So ad types could be anything from display ads to info products to affiliate programs. That could also be specific placements if they have data on that, like a homepage banner, sidebar, in-content CTAs, any sort of breakdown and de-averaged look at all of the different ad types that are on the site is going to be really good for your monetization analysis. So the more granular, the better here. And ideally, you can get reports that go back at least a couple of years. And obviously, this is something that your FP&A team or your corporate development team is going to have a lot of historical knowledge on and practice on. So just partnering with them on giving them your perspective from a subject matter expert's lens in the world of SEO or whatever your field of expertise is, and really just getting a full picture of how they make money and where the gaps and opportunities are to diversify their revenue streams. Obviously, for larger acquisitions, the less diverse their revenue streams are, the more risk that is generally associated with the asset. So ideally, you want a site that is making money from a lot of different areas, or potentially is only making money from a few areas, but post-acquisition, you have the opportunity to turn on a lot of different monetization methods and really get a lot of leverage out of the acquisition between your purchase price and the realized value in the first, call it 6 to 12 months post-acquisition. So a few other things to look at in terms of monetization analysis. One of the biggest areas of opportunity that I typically see for a lot of kind of traditional affiliate sites or just sites that are generally making money through brand partnerships is a significant gap in monetization across the same partners or channels. So I think a really good example of this is just using a base affiliate offer for a pretty competitive landscape in mattress, let's say. So Safa is a really popular American manufacturer of mattresses and beds and pillows and sheets and all that good stuff. Very competitive industry in the world of SEO, and their base commission payout is 3%. The margins on these products that they're selling for $1,000, $2,000 are ginormous. These manufacturers typically have a lot of wiggle room to pay affiliates and still be profitable. Granted, a lot of these mattress manufacturers are not quite profitable yet. It's because they're spending money in a lot of different areas, but generally they're very willing to negotiate payouts with affiliates. So if you are one of these, not just in the mattress landscape, but let's say really in any business unit, and have a corporate development team or a biz dev team that can negotiate increased commission rates from partners, you have immediate leverage to buy competitors or other sites that are just making money off of the base commission level. So this is literally an input that you can just swap out affiliate links. And like, let's say, you have 12 or 15% in terms of a commission rate on this example, immediately 4 to 5x the business just by swapping in your affiliate links. So measuring the gap between what is their current monetization levels and what can you immediately plug in, or potentially over the short or medium term as you negotiate new terms and things like that, what can you eventually plug in? Really big part of due diligence to build your investment thesis on why this is a smart acquisition target to potentially immediately realize a ton of value post-acquisition. You also want to look at how that breaks down into the individual pieces of content that are on the site. So partnering with your corporate development team, your RevOps team, whoever is really looking at monetization and financial analysis for the potential acquisition, and getting at, for all of the top pages across the site and all of the top content, what is the current kind of revenue per visit, or however you measure monetization efficiency on a per page basis? What's that currently based on all the different revenue streams that they have and how they're monetizing each page? And then what's that in its ideal state once you can really either insert your affiliate links with better monetization leverage, turn on all the different monetization avenues that maybe the site is missing today that you could potentially add to the site. That could be things like display ads, adding certain affiliate programs or partners that the site that you're looking at purchasing doesn't currently have, other info products that you could potentially sell, things like fixed fee advertising, and all of a ton of different monetization methods to really juice how the site is performing generally. And just breaking that down on a page level can really give you a fine analysis on not only where is the site currently and where can it get to on the overall, but also this pairs really well for with a keyword opportunity analysis or traffic forecast, which I'll go over in some different videos, and really determining how much growth is there in the asset and in what sections of the site and what keyword landscapes, so you can really get to a pretty detailed opportunity model view of what is the total kind of revenue left in each of the different topics or categories that are on the site today or you're planning to launch content around. So doing some RPV funnels for your top pages in current state versus ideal state can give you a really detailed view of what that potential opportunity looks like and just really where to focus your inputs post-acquisition. And I think one really kind of last note on some of these, this monetization leverage and that concept in general, I think if you have a ton of leverage between what the base commission offers or monetization levels are for a lot of sites in your niche versus what you have and what you've been able to negotiate, it's almost financial, in some cases, almost financially like irresponsible not to buy your competitors if all of the other signals are in the green in terms of content quality, risk in their link profile, and all the other elements of your due diligence. I mean, that's like immediate leverage that you can get out of the business. So if you have a healthy balance sheet, the available cash and willingness and resources to get the deal done, and see good medium to long-term kind of trajectory in the industry and your business as a whole, do your due diligence, obviously, but I think it's a really strong investment thesis if you have some really sizable leverage on the monetization side of things, because that's literally something that you can immediately turn on in most cases post-acquisition. You also want to really understand how stable the revenue streams are. So if you buy the site, is there anything that's really going to dry up on day one or shortly thereafter post-transition? So a few questions that I like to ask here are there any revenue streams that are based on personal relationships? There have been some cases that I've seen where a few sites are literally monetizing just because one of the people on the leadership team is friends with a person on the leadership team at a brand and has a special deal that if that person leaves the organization, that potentially fizzles out or just dissolves, and there's no real teeth behind keeping that deal alive. And so really understanding what's the state of each major relationship, which is why if you look on the right-hand side here, some of the things that I like to ask a seller for, a little bit of a write-up on the state of each relationship for how they're monetizing today can be a great context setter for, is this relationship on rocky ground? Is it on stable ground? Who manages it? And just kind of what is the current state of that specific partner. I'll also ask, are there contracts short-term or long-term? I think there's risks and opportunities to both scenarios. If they have really favorable contract terms, but it's short-term, that's a potential risk in the business where you really need to renegotiate that and make sure that like you can keep a lot of those same monetization levels or increase them long-term. And on the opposite end of the spectrum, a long-term contract could also be a risk as well if there's really unfavorable terms in that contract and a lack of ability to renegotiate with certain brands or partners. That is also going to be a risk for you to potentially turn on a lot of that monetization leverage post-acquisition. So really understanding what those contracts are and if you have a significant ability to change those or just adapt them to fit your investment thesis post-acquisition. And then lastly, are there any key people that you really need to bring over to help maintain the relationships or help grow them? So really looking at the talent pool for the organization or assets or sites that you're acquiring and understanding what people's roles are, who's managing all of those different partner and affiliate relationships, and if there are any key people that you really need to bring over to make sure that those are maintained. So a few other things to ask for, obviously contract details for each partner, and then obviously lists of who runs each partner and their general time allocation so you can get a good sense of how many resources it's going to take to maintain and deepen a lot of the relationships that the site currently has if it were on your platform. A few other things to look at in terms of monetization. So one, I'll always try and judge what's the macro environment look like for future monetization. Is demand going to continue to grow in the category? And also, is the affiliate landscape really more sophisticated or more commoditized? So are brands really willing to improve commission rates or really negotiate to grab market share? Or do they not really care all that much and it's going to be really tough to move the needle from their base 3 or 5% commission rates? So understanding that, obviously your corporate development team and some of your leadership should have a pretty good pulse on that from some of their industry research, especially if you're already in the category or niche. Just here's an example of one that I think is fairly sophisticated in the supplements and diet and nutrition niche, where commission rates are already really high and brands typically are pretty aggressive in increasing those commission rates and sometimes giving recurring commissions as well for folks who are on subscription services. And sometimes, if they are just based on a single bounty for a commission, close to 100% just because of that recurring revenue model that they can get from those customers that you're sending them. And then I mentioned this in a different video on competitive analysis and how SERPs can potentially impact monetization, but I think this is a really big factor when it comes to determining how the macro landscape can potentially impact future monetization. So understanding what SERP features are there currently, what could potentially creep in over time, is important to make sure that you identify additional opportunities and risk within the business and incorporate that into your investment thesis for the acquisition. I'll also look at how seasonal the business is. Is there a certain period of the year where it's going to be a super make or break time for the business, and how predictable is that volume and your performance during that period? Obviously, the more volatility and unpredictability there is in that period or in the business, the more risk that's associated with it. But if you're comfortable with that risk, or if you have a lot of experience in the category and really feel confident about your execution plan during those really busy times of the year, or you have significant leverage to really get an outsized return, versus your competition in those periods of the year. Obviously, that's something to incorporate into your due diligence assessment and your investment thesis for potentially buying this site or group of assets or whatever you're looking at. So just a couple of examples here. One, a GA screenshot from a pretty seasonal site that's in the summer. And then obviously Google Trends is a decent place to look for topical seasonality. There's a ton of other trend platforms out there as well where you can really look at how that stuff is ebbing and flowing over time. But generally, this should come from your broader macroeconomic analysis around the niche or the industry, and then really just matching that up to traffic data that you see either third party, ideally first party, pre-LOI, but really understanding how seasonal that business is going to be. So obviously a lot to look at from a monetization analysis perspective. These are just a few questions to get you started and really understand where to look in terms of the financial performance of the business. And like I said, digging a lot deeper with your FP&A and corporate development and the rest of your leadership team to really understand how the business is performing financially over time should give you all of the answers that you need to make a really confident decision about whether or not to buy the site, and also what your investment thesis looks like for potentially growing it over the short, medium, and long term.